Guten Tag, Martin. How are you doing today?
I'm fine, thanks. How are you?
I'm very well, thank you. So it's a pleasure to spend some time with you. So we're on day 2 at Sibos 2019, which is arguably the biggest, baddest, meanest Sibos ever, with more than 10,000 people. So it's going to be a number of busy days ahead. Just before, if we step back, I'm glad we're catching up today because a few months back in Singapore, I interviewed some of your colleagues, Eli Rosner and Smita Gupta, on various topics, more products related. Today, I think we'll stay at the industry level to try to gather some of the key insights and thought leadership you have. So Sibos is big, a big investment in time and money. So why is Finastra here?
Well, for us, Sibos is every year a place to be. Because what we promote here, especially in Sibos, is our platform. You interviewed Ali some months back when we launched FusionFabric.cloud as the open platform for innovation and collaboration for fintechs. And this trend is just continuing. And why? Because we see as a big trend here at Sibos the move towards open, the move towards APIs, the move towards platform. All the tracks that I'm listening in are mentioning these three topics in a big way.
So, and we're talking really ecosystem. So this is not just for large financial institutions, but you really see that, of course, as the key trend to foster collaboration, to enable smaller ones, bigger organizations to all come together and potentially rethink the customer experience. Am I correct?
Exactly.
What are the key challenges then for organizations to do that? Because we talked about collaboration for years and ecosystems and API.
Sure.
So how can you help fix that? And
well, I think there are two problems, one on the banking side, one on the fintech side. When you look at the banks, even if they want to be innovative, sometimes they are handcuffed. Why? Because they have legacy infrastructure. They have development processes that are not agile. They have proprietary systems and infrastructure they can't get rid of. So even if the CIO wants to be innovative, it's sometimes really hard to put all the infrastructure in place for their own in-house developers to develop at a faster speed. Today, normally it takes up to a year from the point that the customer wants something from the bank and the bank can match that and bring out the innovation to the market, almost 1 year. In the future, the bank's customer wants changes much more frequently. They come up with a new idea and a new customer experience they expect, and they want that the bank is changing on this element within weeks, not years, right? So the bank is now looking for maybe a sandbox where they can play around with stuff in an earlier phase. The chief digital officer, the chief innovation officer is looking for systems that are in the cloud where they can access certain infrastructure on demand as they go, and there even in-house developers can use cloud-based systems or sandboxes where they can test new innovation at a much faster speed. This is one area. The other area is the fintech area. When you think about all these fintechs that have crazy new business ideas, but they have a hard time to knock on the door of a large incumbent bank and saying, hey, I have a clever idea, but I want access to your data infrastructure and to your back-end systems. The CIO gets probably a heart attack from that bank, and it takes sometimes, and we have heard that from fintechs, 6 to 12 months before a fintech can really access a banking back-end infrastructure. Again, for that reason, we have put in place our platform, FusionFabric.cloud, to tell all the fintechs, if you want to test your applications against a payments backend system or a core banking system or a trade finance system, log into our FusionFabric.cloud platform and you can test and build your application immediately at no cost. And that is something that you won't find out in the market right now. A platform that allows fintechs, individual developers, bank developers, schools and university to program new financial applications on a platform that is for free, unless you charge people to pay for whatever application you have developed. This is where we also then charging the fintechs. So for both sides, fintech access to the market, access to banks, access to a larger marketplace to sell their application and to develop the application, and for the banks to drive fast innovation. These things are working towards more or less what we want to develop and deliver into the financial ecosystem, FusionFabric.cloud.
I agree with you. I used to work at banks, and I remember actually vividly, I'm talking back in 2007 and 8, being in charge of innovation for a very large UK bank, right? And we used to say that it would take us 9 months to change the color of a button within online banking.
Exactly.
So I'm not even talking the public website, but online banking, that was almost impossible to do anything done very quickly. So I feel for you, I understand that. Platforms, again, I think it's the future, unarguably, so people understand that. The challenge is, I believe, always the same. It's not just, of course, to provide that platform, right? And the security and doing that in an agile way, which is important. There's at least two things. One is to give them the tools in addition to that platform, so to build the services and then to get access potentially of smart services like AI, machine learning, and give that access to the big ones, but also the fintech. So that's the question I have for you. And the second one, so one is giving access to analytics and smart services or microservices. And the other one is incentivizing still the small fintech to spend the time and energy and effort to build potentially new customer experience, especially if it's money-based, if there's a price, whereas it's going to be hard sometimes for banks to drive usage of those services. So then the revenue model is not that clear, I feel like, for at least for some smaller fintech. What's your view on those two things, please?
Let me address both.
Do you agree with me? First of all, you can disagree.
No, 100%, I fully agree. And let me try to explain how we address this.
Please.
In the first instance, you are absolutely right. It's not just the platform. It's not just an API. A lot of banks are doing this. A lot of our competitors are doing this. What makes, I think, us different in that context is that we are not only offering the pure raw APIs, but also the development environment. So we have a development environment called Fusion Creator, where you create applications almost in a no-code environment. And to create a full financial app takes you 2 or 3 hours. We have run hackathons where within 48 hours, full financial apps were built, not just a call to a payments initiation or something like that. No, a full mobile wallet, for example, in 48 hours. From logging into the platform and creating a full application. But that's not the only element, the Fusion Create element. It's also, once you have the app, you want to deploy it into a cloud environment. So how do you build an app and deploy it on a worldwide basis so that app is reachable and consumable by banks all over the world? Right now, if you are a fintech in the UK, you want that your application is accessible and executable on a worldwide basis. So we have created an environment which is called Fusion Operate, where you deploy your applications into a cloud environment. And the last element, you exactly touched that, how do you make money? A fintech finally wants to make money, right?
Exactly.
Currently, they are doing this in a one-to-one approach with the bank. And some of them are successful, some of them are finally bought by the bank, but a lot of them are suffering, and if they suffer once with a bank, maybe they are running out of gas to do it with the next bank and the third bank. But with our platform, they can put their app onto a store, and that's like the Apple App Store. You put it on that store, and every bank around the world can go to our store, look at all these apps and would say, oh, this AI application is very good for us and would increase the customer experience for our banking services. So they download this app and then they can either run this app on their premise or they leave it in the cloud and run it as a cloud element. And at the time, the fintech would monetize, also Finastra would see a fair share. So we have two monetization models. One is revenue share. So let's say the app would cost $1,000 a month. We would get round about a 30% out of that.
Okay.
Or we are charging based on the API calls, because not every API is the same. A payment initiation is a very simple transaction, whereas maybe you pull all the data from the last hour of payments transaction and then make a risk assessment or fraud detection is a very complex API call. So you might want to have two business models, one based on application recurring revenue and one on transactions that are going through the platform. So these are the two elements that we see.
Understood, yeah. And that makes sense to me because then they can mutualize their effort, their investment in time, money, and developing to make it available to not just one bank. So that's, today it's already available. It's already,
yes.
People can use it, organizations can use it, fintech, universities and banks, which is great. So that's 2019. It's almost the end of 2019 already, which is crazy on so many levels.
Yeah.
2020 is coming very quickly, very fast. What do you see as the biggest and the next trends or new challenges maybe that you aim to address with your platform and other services potentially?
I think 2020 would be too short-sighted. I'm always thinking about the next 3 to 5 years.
Okay.
And I think in that context, we need to see that the whole banking industry is moving to almost a utility-based model. When you think about power or internet connectivity, if you switch on your phone, you don't care who is the internet provider who gives you the internet access. If you put your laptop in a power socket, you don't know who's the power provider behind and you don't care. If you do a payment initiation and a payment from A to B, you don't care which banking services is the building block behind, right? You can't care less. And I think what you see in the payments world today is just the tip of the iceberg, where you see more and more services are disclosed from banks, where banks have to open up their infrastructure and become utility providers of banking services. So I think the bank today needs to decide what is their future bank model. Is it a service provider model, really being a utility provider? Then you need to run your fastest, most efficient, cost-efficient infrastructure backend, like a power provider or an internet provider. The margin is the critical element, and to run this the most efficient way, you have to go to a cloud-based business model. One thing. Or you might be an aggregator. There are tons of fintechs doing aggregation services today. Why shouldn't the bank do this? Why do they not want to show you not just your bank account, but also your bank account information of the other bank, or the mortgage you have with a competitor? So if you don't aggregate all the stuff on your own mobile app, then people are switching to a service provider who can provide that. So the change in business model, becoming a bank as a service or a bank as a platform, for me that is the Uber trend. And the path towards such a future is built based on platformification, is built based on open APIs, and is hopefully based on FusionFabric.cloud going forward.
Of course, we hope that for Finastra at least. But I think again, you touch a very important point about account aggregation. I remember going to the very first Finovate, like in 2006, I believe, in New York, or 7, where we were like 18 in the room, and now it's straight, right? Everybody was talking about aggregation, PFM, personal financial management. So the Yardley of this world, sorry to name a brand, but which they've done very well. And yet in 2019, as you said, we're still not in an era where my bank can tell me exactly which kind of accounts and transaction I have from a credit card company, or which is, so is there a real reason why it's not happening? Is it just, you know what I mean, and why then? Like, because I totally agree with you.
I personally think you will see a revival of that. Why? Because at the time we brought out these ideas, there was one thing not existing, and that was open banking, right? We had certain standards how to attach to a bank infrastructure, driven, to be honest, a lot by the German infrastructure, which had a PSD2 kind of protocol already to
the Germans always
take a step forward. But I think at the moment of PFM, we haven't had the ability that banks were opening their infrastructure to let third-party application really access that.
Was really a lot of friction, like Excel, download CSV files.
Exactly, that made it clunky, and that avoided the real power of PFM. But now, since, is it last weekend, I think, PSD2 was coming into play. And I know a lot of banks send letters to their customers saying, hey, PSD2, we are changing, the APIs now exist. And PSD2 is just the tip of the iceberg, making sure that PFM applications are now much richer, can aggregate accounts over different platforms. But for me, this is the beginning of a larger trend, which I called open finance. And open finance is the move from just open banking and open APIs and PSD2 to a world where trade finance systems, lending systems, all the other core banking systems are opening up their infrastructure through open APIs to the rest of the world. So for me, PSD2 is just the beginning. I think we will see a new bank revolution coming through that open finance movement, open everywhere, and we see completely new different business models from banks, but also much richer applications on the fintech side, because what comes with all of that is also something that we underestimate today. It's the power of data. Because the more you open up your infrastructure, the more data you have across different banks, the more intelligence you can put on a different level in terms of machine learning and AI. And that gives so much power in the hand of consumers, but also even in the corporate banking world to corporations, that where I think we are just at the beginning of something much bigger. So for me, this is the next 3-5 years are dominated by that platform play, dominated by machine learning and AI, and dominated by the fact that banks need to deliver a way better customer experience to end consumers, but also to corporations.
And I think that's a great way to end the interview. Thank you so much, Martin. I feel like the role of the human interactions is going to be something we'll have to discuss, not now, but later, potentially. And I think that you totally nailed it. But it's not a matter of having the data, because banks sits on like gazillion of data. Is to use that data in a smart way to then empower their customers. And we're still not there, I think, in retail banking on many levels, but anyway.
But also in an ethical way. I think that is an element which...
In a transparent, ethical way, I think you're right, it's extremely important. So it's a sharing economy. You need to convince as well the value of sharing so much, especially in the era of Google and Facebook. And sorry, thank you so much, Martin, for your time.
Pleasure.
All the best for Sibos 2019, and
thank you.
See you soon on the FinTech Part 50.
It was a pleasure to be here.